Now, there is a lot of bad information out there from agents and from banks alike that are telling homeowners you have to expect to pay money at the close of a sale when you're doing a short sale, or that you have to accept an unsecured note. You're basically saying you'll pay back the bank for part of the balance that they lost by doing the short sale. Many agents are actually harming homeowners by telling them to do a short sale along with accepting an unsecured note and a cash contribution. The only cases where I've ever had to have a client pay an unsecured note or a cash contribution is one when they're intentionally in default. They have the assets or the means by which they can pay the mortgage, but they choose not to. And even then, I would never allow them to contribute money from a 401k as that's a protected asset. A lot of homeowners are told to borrow from their 401k in order to put it towards the sale of their home. When in reality, if the home were to foreclose, even if they were open to full liability for that balance, the bank could never sue them for the balance in their 401k as it's a protected asset. If they don't have any other assets, it doesn't make any sense to borrow from your last remaining protected asset to contribute to the sale of a home. Now, of the hundreds of files, and that's literally hundreds of files that we've negotiated on behalf of homeowners, there's only a couple cases in which we had to accept an unsecured note or cash contribution. One of those cases, like I mentioned before, was an intentional default. The client had money. And in another case, the co-borrower actually had assets in the range of seven figures. So they were willing to take a $20,000 unsecured note rather than be open for the liability of the entire balance.